Welcome to the Business Standard Banking Show. Digital transaction is growing at a rapid pace in India, post the demonetization exercise of 2016, and then the COVID-19 pandemic also gave it a boost. That does not mean that cash has become redundant. Currency in circulation has grown 2.5% in the April-June quarter over the Jan-March quarter, and monthly ATM cash withdrawals have grown by 6% quarter on quarter. CMS Infosystem, which manages cash deployment in ATM among many other things, hit the capital market in December last year. To talk more about the cash economy, the ATM and the CMS growth plan, we today have Rajiv Kaul, Executive Vice Chairman and CEO, CMS Infosystems Limited. Mr. Kaul, welcome to the show.
Thank you, Manojit. Good to be here.
Thank you. There are two main revenue streams of CMS Infosystems. One is the cash management and other is the managed services. Cash management roughly contributes 70% of your revenues. You plan to double your revenue to 2,500 crore by FY25. What will be the driver for this growth?
So we ended FY21 at 1,300 crore revenue, and from there, yes, it's a doubling of the number to roughly 2,600 crores by FY25, which should be a CAGR of 18%. If you look at FY20, which is the year before COVID, we grew 20% in revenue. I'm ignoring the COVID year for obvious reasons. And then you look at FY22, which is the year we just ended, we grew at 22%. So we are on track to meet this goal, which you set for ourselves in the midterm. Now, what will drive this? I think more than a company specific, let me first tell you at a macro level. I think at a macro country level, this will be linked to increased formalization of India, which is accelerated post GST, increased consumption in India, domestic consumption in India. From a sectoral perspective, the drivers will be banks expanding their network and reach. Banks also needing to outsource more. In some ways, many banks in India are like the telecom companies 10 years ago, where a lot of work was going out in-house and then they started outsourcing those contracts. And third, I think the regulator in India is very focused on the quality and availability of services to consumers, which is a citizen of India. And they are also insisting on very strong compliance and process norms, which will help grow the sector. At a company level then, we feel that we are able to see a very strong performance for our core business. And then if you mix it with the fact that we have an order book of almost 2,500 crores today, I think that gives us a very strong confidence of hitting these numbers.
And your market share is cash management services is about 46%. And you plan to increase to 50% by 2024. Do you think you're on track to hit that target?
So if I have to rewind back, right, about 8 years ago or something, our cash management business market share was close to 21%, maybe 22%. That is right now at 46%. We have grown this from 42 to 46 in the last 15 months. I feel confident that we should be able to hit a 50% market share driven by no acquisition. We simply think that the fact that there is a demand for high quality players, high quality of services, deep networks in the country. I mean, everything what we stand for and what we have built over the last 10 years, I think there's an increased need and demand for it. Then if you mix it up with the setback which the society and a lot of companies had during COVID, maybe in future with inflation and high cost of interest, I think a strong, well-performing, robust financial company like us benefits much more in these times. So we feel that setting a goal on organically growing our market share to 50% is quite possible.
And what are the growth drivers for the managed services you see from where the growth will come from?
Sure. So our managed services business is something we've incubated only over the last 5 years. So 5 years ago, we were predominantly, if you go 10 years ago, we were mostly an IT infrastructure services company. I actually wanted to step back a little bit and also just for the sake of your viewers, explain who are we all about, right? We are here to build a business services platform, a fast growing business services platform, which caters to outsourcing needs of large companies in India. Fundamentally, that's the premise where I came to CMS, we did the buyout from the Grover family, and we have been building it. We were an IT infrastructure services player, which we slowly hived off because the growth profile of the business did not meet our ambition and needs. We then became the largest and best cash management company in India. I'm saying 2014, 15, 16, at which point we expanded the business and our target sector to managed services, where we have built a 500 crore business over the last 5 years. Now, our growth in the managed services business, if you think of it in the last year, would have been close to maybe 40%. We feel that this business has the potential to grow at a CAGR of 30% for the next 3 to 5 years. Why do we feel that confidence? Number one, we think I talked about the fact that banks are increasingly looking to expand their network. If they have to meet their norms of raising deposits, they have to increase reach in tier 3, tier 4, tier 5 cities, they have to add branches. They need players like CMS to help them in that journey. Secondly, the processes are becoming fairly complex, and therefore, to manage them efficiently at a good cost, a bank needs to rely on partners like us. And that's where the opportunity comes in, where we are a unique company. I say unique, I don't say special, where we have built a lot of capability both on logistics, reach, network capacity, and technology in-house. And we are able to, I think we are a partner of choice for many banks which are looking to expand in the hinterland of the country. I think that's what we feel will help us grow this business. 30% growth, if we can do it 3 years, is almost more than doubling the business in that period.
There was a lull in the ATM deployment for 3-4 years. It has picked up now. SBI and HDFC Bank are some of the banks which have announced aggressive branch expansion strategy, which will also mean installations of ATM. So do you see more and more banks are installing ATMs going ahead?
Yeah, I think at a sector level, right? At a sector level, the large banks, both public sector as well as private sector, there is a need for them to increase their reach to their consumers. And ATM is only a fulfillment model, right? Finally, a bank, if the bank has to grow, they need capital, and they need to raise deposits from consumers and account holders. So they have to increase the number of accounts, and they have to raise that. For that, they have to give them access to the banking needs, which comes through the form of a branch, or it comes through the form of an ATM. Invariably, both an ATM and a branch is there, and then around the branch, they have to set up another ATM, because that's a basic need a consumer of a bank wants. He or she should be able to come to a bank branch. They should be able to go to an ATM and withdraw the money when they need to withdraw the money. And therefore, you hear about a plan of HDFC, SBI, which you already alluded to, and other large public sector banks, which are looking to expand their networks reasonably aggressively. There was a lull for the last 3-4 years, but that, again, I always link this to economy, and I link this to sector. The economy was going through a lot of transformation post demonetization, right? Whether it was GST and many other things were going on. Secondly, the banks were dealing with capitalization needs, especially the public sector. So that cycle of infusion of capital, and also the PSU bank merger, which delays a lot of investment decisions, took 3 to 4 years time, which looks bad at that time. But from a decadal perspective, I think we have now got a banking infrastructure which is very well poised to help deliver growth for India. India grows, CMS will grow. We see aggressive plans for banks, not only the two you mentioned, but the banks, to increase their penetration through branches and ATMs. On top of it, the other opportunity of growth, which gets neglected, is you think of the fact that India has got almost 2.5 lakh ATMs. We are the world's third largest ATM market, which is not recognized very well. Again, linked to the population. We have 2.5 lakh ATMs. These ATMs need to be replaced because technology changes, technology gets obsolete every 6, 7, 8 years. There's a fairly large infrastructure required to be doing that. And we are a very key player in that sector.
Do you think white label ATM deployment has gained pace in the last few years?
I think the white label business in India has done very well in the last 2 years. The number of ATMs should be close to 35,000 ATMs. So almost 12-13% of India's ATMs are now white label, which means they're owned by a private company and not by a bank, and are run like that. I see fairly good growth opportunity in the white label space. The public sector banks like SBI, which are expanding the networks furiously, and even large private sector leaders like HDFC Bank, which are looking to increase both their ATMs and their bank branches. And we see all of this contributing to a very healthy growth opportunity for our sector.
RBI has recently proposed that the cardless cash withdrawal at ATMs through UPI. What are the operational and technological challenges for this, and when do you see this is becoming operational at a mass scale? So,
I think it's a brilliant move, because when you think of a business like ours, it actually brings the best of physical and UPI. UPI has been a marvelous, phenomenal innovation in India, well regarded by everybody. So, there's no point talking more about it. it has allowed a consumer to all of us have a very efficient, relatively, I wouldn't say fully, but relatively safe way of conducting transactions. 80% of UPI today is person to person, which is मैंने आपको 500 रुपया, I need to pay you 500 rupees, 1,000. It is not person to merchant. It's still not, right? Of the value. Volume is 50-50, but 80% of the value of the transaction is person to person. 20% is person to merchant. We don't have a role to play in person to person. We really play the role in the person to merchant. But we see this could bring the best practice and ubiquity of UPI to the currency, cash management, physical channel. Is it widely adopted yet? No, because there is a time lag for each bank to integrate its software, to make sure the ATMs are capable, make sure of the security offerings, and to do that. And also, then the second part is consumers to feel, there's a behavioral change that I don't anymore need my debit card to go to an ATM to withdraw currency. That behavioral change will take some time. It may take 4, 5, 6, 7 years, we don't know. But it's great because, if you will notice, so many Jan Dhan accounts are there. Earlier, there was some criticism saying how much money is. Now the Jan Dhan accounts have balances, they maintain whatever, but all of the Jan Dhan accounts don't have a debit card. We would like them to have a debit card because the more number of debit cards, the more they can access an ATM service. But for the bank, there's a cost to a debit card, and for some reason, the debit card issuances have been lagging behind. But now, thanks to UPI, that bottleneck in that supply chain gets reduced and removed.
The ATM interchange fee was hiked from 15 rupees to 17 rupees for per financial transactions last year, which was after a gap of 9 years. Do you think that has the increase has helped managing the cost, or there should have been the increase would have been much more?
Was the increase enough? No, but it'll never be enough for anybody in that sector. I think there will always be a balance which has to be maintained in terms of how that cost can be borne by the population, by banks, and by the sector. Of course, if the interchange was higher, it would have helped enable far more penetration and growth of ATMs. However, I'm relieved that at least the authorities and the regulator and NPCI took a positive view and changed it because your utility cost goes up every year based on input costs. And it was just wrong in our mind to see that this cost wasn't going up for 7, 8, 9 years, where all costs go up, your rentals go up, your electricity cost goes up. These are significant costs in running and maintaining an ATM. I still don't think there is a good balance. There should be some automatic process for doing this on linked to CPI or whatever every year, every 2 or 3 years. But I guess that becomes a little bit more of a contentious issue. So at the moment, we are relieved that at least there has been some increase. Is it enough to tackle the need for ATM growth? No, but I guess, again, we take a very decadal view and saying from a decadal perspective, from a 1 year perspective, not good, but from a decadal perspective, positive step. We hope it remains and maintains and then gets upgraded to the next level whenever the banking system is able to take care of the hike.
Right. On that note, Mr. Kawal, thank you so much for speaking to us. It was a pleasure talking to you.
Anuj, thank you so much for your time. Pleasure was ours, and we'll be in touch. Thank you.
Thank you, sir. Thank you so much.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.